Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 3rd of June 2019 and we're discussing the prospects of a near global recession and what are the telltale signs which may depict its immanency. We are all by now aware of the trade conflict, which some call trade war, between the United States and China, which escalated last month when President Trump raised tariffs on hundreds of billions of dollars worth of Chinese imports to 25% from 10% and threatened levies on all Chinese goods. We have produced many YouTube videos on this subject and no doubt will produce many more. We also alerted subscribers last week to Washington's new tariff threats against Mexico starting the 10th of June, resulting in stock markets tumbling around the world and the 10-year US Treasury yield falling to 2.121%, a nadir last seen in September 2017. According to some, this move also jeopardises the proposed replacement to NAFTA if these tariffs are in fact imposed. Our latest video on this subject is entitled Gold and Silver Prices Rise on Mexico Tariff Threat, and we place a link to it in the description below. We have also mentioned the United States removing favoured import status to Turkey and more recently India on a range of goods, in effect resulting in higher import prices of those goods. Only yesterday we produced a video entitled India's Growth is Falling, What About Gold and Silver Demand?, where we address this issue in relation to India, and again place a link in the description section below. Now, most of these tariffs and or favoured status treatment removals have either only recently taken place or are about to take place, and we have seen already some clear indications of economic setbacks that these have to some large extent already caused. It is reported by Reuters today that, and we're quoting them, factory activity contracted in most Asian countries last month as an escalating trade war between Washington and Beijing raised fears of a global economic downturn and heaped pressure on policymakers in the region and beyond to roll out more stimulus. Such growth indicators are likely to deteriorate further in coming months as higher trade tariffs take their toll on global commerce and further dent business and consumer sentiment, leading to job losses and delays in investment decisions. Some economists predict a world recession and a renewed race to the bottom on interest rates if trade tensions fail to ease at a Group of 20 summit in Osaka, Japan, at the end of June, when Presidents Donald Trump and Xi Jinping could meet. Unquote. Now, economic figures, which we all know tend to lag what is actually happening real time, show that in Japan, South Korea, Malaysia, and Taiwan, that their PMIs, Purchasing Managers Index or indices, were below 50, which means contraction. And also, Vietnam's figures were below expectations. However, in China, this index stands at 50.2, meaning very moderate expansion, but one cannot assume that this will continue and not retract below that crucial 50 level. The inevitable response from policymakers and central banks will be to reduce interest rates and look at boosting domestic spending to compensate. And it is expected that as early as this week, Australia and India will cut interest rates, with other countries around the globe following suit. Europe is in no better a situation either, where Eurozone activity is expected to shrink as well. In contrast, though, US manufacturing is expected to grow steadily, but eventually will be affected by this potential recession in the rest of the world. This has therefore led to forecasts by the likes of JP Morgan for the Fed to cut rates twice this year, when only a short time ago it expected it to hold rates steady until 2020. Now, our assessment is that there may indeed be one rate cut this year, but it is more likely to happen in the latter quarter, that is, September or later, and not as early as July as some are predicting. If it does happen at all. We're not totally convinced yet, but we shall need to see further reporting before we can be more certain. Coming briefly back to China and the US, we have stated time and time again, in fact for a number of years, that these two economies currently dominate the global marketplace, and their interrelationship is paramount for global economic health, at least for now. The fact that they have temporarily fallen out, though concerning, is not at this moment devastating. Having said that, however, this past weekend, tensions flared again between the two over trade, technology, and security. The catalyst being concerned with security disputes over Taiwan and the South China Sea. In addition, on last Friday, China also threatened to unveil a hit list of, quote, unreliable, unquote, foreign firms, groups and individuals that harm the interests of Chinese companies. Clearly, in retaliation after Washington last month put Huawei, the Chinese telecom equipment giant, on a blacklist that effectively blocks US firms from doing business with it. We shall end this podcast video with the comments from Shaitan Iyer, the global head of economics at Morgan Stanley, who quoted that if China were to retaliate against the US further, quote, we could end up in a global recession in 3 quarters, unquote. Some food for thought, no doubt. Meanwhile, this morning gold is up £4 at $1,037 and up $4 at $1,310, while silver is up 10 pence at £11.57 and up 4 cents at $14.65. What are your thoughts? Are we about to enter a recession? Are we already in it? Or could it be delayed into 2020 or even 2021, as some economists predict? Do share your thoughts on this matter. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.